Hello everyone, this is Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. In this session, we'll discuss about provisions, contingent assets and contingent liabilities as explained in Ind AS 37. So, according to Ind AS 37, they define what is a provision, what is a liability, what is a contingent liability. If we again go back to the definition of a provision, so you all might have come across with different type of provision while preparing the books of accounts, like provision for doubtful debts, provision for taxation, like provision for depreciation. So, such items you would have come across with. Then what is the meaning of provision? So, here provision is any expense or liability which may happen in future, which is not present right now. Maybe because of our present actions, it may result as an expense or liability in future. So, in the current year itself, we are keeping a part of profit aside in order to provide for the future loss or future liability or future expenditure. Okay. For example, provision for doubtful debts. Like out of our trade receivables or debtors, some may not pay to us. We think that okay, 5% of it may not come. Like we are trying to be prudent, we are trying to be conservative in the books of accounts. So, we keep say 5% of our debtors as a provision. So, they may become bad debt or they may not, but right now at present we want to keep some aside to play safe. So, that is called as provision for doubtful debts. So, what happens when I create a provision? My current year's provision is my current year's profit is reduced to that extent, and my debtors which I am showing at the end of the year is reduced to that extent. Okay. So, a provision is a future expenditure or loss which may or may not happen. Then what is a liability? Of course, you all have come across with the term liability. We show current liability, non-current liability in the balance sheet, which is statement of financial position. Then what is the meaning of a liability? Liability is the current obligation or what the business owes. What the business owes is called as the liability. And of course, it is recognized and it is presented in the books of accounts. Then what is a contingent liability and what is a contingent asset? So, is there any heading in your balance sheet for recording contingent asset or liability? Of course, we have non-current asset, current asset, we have non-current liability, current liability, but we never come across in the balance sheet a term called contingent asset or contingent liability. Then what is it? So, these are the future liabilities which is not there right now with us, but in future it may or may not become. Again, that is uncertain. Then what is a contingent asset? Again, these are the assets. Right now the business does not own it, but in future the business may get this asset or may not get this asset. That is called as the contingent asset. So, let us see as per Ind AS 37, how do we measure it and how do we recognize it, or do we recognize it or not? How do we present it in the books of accounts? First and foremost, provision, how do we recognize it? So, provision is recognized in the books of accounts only when an enterprise has a present obligation as a result of past event. Like say you have creditors, why the creditors have happened? Because you have purchased the goods on credit. Or you have debtors, why debtors have come to your business? Because you have sold the goods on credit, isn't it? So same way it should be based on your past event. It is probable that an outflow of resources embodying economic benefit will be required to settle. That means in future, because of this, the outflow may result. Suppose you may come across with bad debts, or you have to pay taxes. Okay, so that means you have to the sure that there's some outflow is going to happen. Only thing you don't know how much exactly it will be. A reliable estimate can be made of the event of obligation. That means you can make an estimation. Say out of my total profit, say as per my previous experience, say 35% may be the corporate tax, or out of the experience say 5% are doubtful debts, or out of my estimation 10% of the value of the asset may be lost as depreciation. So you can estimate it, and the estimated can be reliable. So if these three conditions are not met, then it is not, you don't recognize the provision. So only if these conditions are met, then you recognize the provision. Then how does contingent liability is recognized? So it is not recognized in the books. That means it doesn't appear in your either statement of profit and loss or in the statement of financial position. Then what do? We can show it as a note in the balance sheet. So it's disclosed unless the possibility of an outflow of resources embodying economic benefits are remote. Like you're not sure, you're not certain, and maybe it happened in a very remote time, then it is called as contingent liability. But contingent liabilities are not recognized in the books. That means you don't show it as one of the item. So example could be a claim that an enterprise is pursuing through legal process where the outcome is uncertain. Like maybe there is a case, maybe there is a compensation case put on the company where the case is still going on. If your opponent wins the case, you may have to pay some compensation. If you win the case, you don't have to pay the compensation. So in such case, that is a contingent, if it is contingent asset, then it's like you have put a case on some property. If you win, the property may come to you, or if your opponent wins, the property may go to him. Then in that case, you don't still own it. You may own it and you don't know when. So in such case, it is called as the contingent asset. So you have contingent liability also, you have contingent asset also. Either contingent asset or liability, both of it are not recognized, because right now you neither own it or you don't owe it. It may happen in future or may not happen in future. So you don't recognize it. Yeah, if we take a recap of what we discussed so far. So Ind AS 37 deals with what is the meaning of provision, what is the meaning of a liability, what is a contingent liability, what is a contingent asset. So a provision is a liability, or it can be an expenditure which is the result of the past event, and where the estimation can happen in future. Like this, you can estimate what could be the loss, or what could be the expenditure, what could be the liability which will fall due in future. Then you recognize it in the books of accounts. Then a contingent liability it is a possible obligation which may or may not happen, that too, and there's uncertainty, and it may happen or may not happen, and the outcome is at a remote time. In contingent asset, so probable inflow of some economic benefit, again which may or may not happen depending on the conditions. So out of this three, only provision is recognized in the books, and contingent assets and liabilities are not recognized, but they are shown as notes in the balance sheet. After the balance sheet is prepared, it can be shown as a note if it is very prominent, and if the amount can be reliably estimated, then you can show it as a note, not as an item in the income statement or balance sheet. Hope the concept is clear to all of you. Again, on this, there is no numericals asked. You have to know the theory behind what is provision, what is a contingent asset or liability, and how to treat it as per Ind AS 37. Thank you very much.